Good morning! Two completely different companies dropped their Q2 earnings this morning, and the market's reaction tells us everything about what investors really care about right now. In the next 4 minutes, I'll break down why Etsy shareholders are probably reaching for the coffee while Teva investors are already planning their next moves. Before the market opened today, we had two earnings reports that perfectly illustrate how different investor expectations can be. On one hand, Etsy, the handmade marketplace that's been trying to prove it's more than just a pandemic winner. Analysts were expecting modest revenue of around $647 million and earnings per share of 48 cents. On the other side, Teva Pharmaceutical, the generic drug giant that's been clawing its way back from debt troubles. Wall Street is looking for revenue around $4.27 billion and adjusted earnings of 62 cents per share. Two very different stories, but both companies had something to prove this quarter. Let's start with Etsy. And honestly, this is a perfect example of why you can't just look at the headline numbers. Revenue came in at $672.7 million. That's actually 4% above what analysts expected. So far, so good, right? But here's where it gets interesting. The adjusted earnings per share was only 25 cents, missing expectations by a whopping 23 cents. That's not a small miss. That's the kind of gap that makes investors nervous. But here's the thing, and this is why context matters. About $25.4 million of that earnings hit came from non-cash foreign exchange losses. Think of it like this. Imagine you're running a lemonade stand, and you're actually selling more lemonade than expected, but the exchange rate between dollars and quarters changed, making your profits look smaller on paper, even though your actual business is doing fine. The market's reaction? Etsy opened down about 4%, which honestly isn't as brutal as it could have been given that earnings miss. Options traders were pricing in up to 11% volatility, so a 4% drop suggests some investors are looking past the headline numbers. Now let's flip to Teva, and this is where things get really interesting. Teva actually beat on earnings, 66 cents per share versus the expected 62 cents. But revenue was slightly soft at $4.18 billion, just missing that $4.27 billion target. Normally, a revenue miss might worry investors, but here's why Teva's story is different. Their branded drugs are absolutely crushing it. Austedo, their movement disorder treatment, grew 19%. Ajovy, their migraine drug, jumped 31%. And get this, Uzedy, their schizophrenia treatment, exploded 120% year over year. These aren't generic drugs competing on price. These are high-margin, innovative treatments that show Teva is successfully transforming from a pure generic player into a specialty pharma company. The company reaffirmed their full-year revenue guidance, but slightly narrowed their earnings range, which actually signals confidence rather than concern. Pre-market, Teva was up about 3%. All right, here's my take on whether these are buys, holds, or avoid at all costs Etsy. I'm cautiously optimistic, but would wait for a better entry point. The revenue beat shows the platform is still growing, but that profit margin pressure is real. I'd wait for the stock to find support around the $50 to $55 range before considering a position. The company has proven it can adapt, but it needs to show operational leverage. If you're already holding, don't panic. But don't add here either. Teva. This is actually looking like a turnaround story that's working. The branded drug growth is impressive, and their strategy to double biosimilar revenues between 2024 and 2027 shows clear direction. With the stock up 3% pre-market, I wouldn't chase it today. But any pullback towards 16 to 17 could be a solid entry point for patient investors. The debt is still a concern, but the earnings momentum suggests they're managing it well. Bottom line, Teva looks like the better risk-adjusted opportunity right now, while Etsy needs to prove it can translate growth into sustainable profits. Both companies are at inflection points, but Teva's executing on theirs while Etsy is still figuring it out. That's your earnings breakdown. What do you think? Are you seeing value in either of these names? Let me know in the comments below.